Just because your house is worth a lot doesn't mean you feel rich. In fact, a lot of people ironically feel the exact opposite. Maybe you've been paying your mortgage on your home for the last 20 years and have hundreds of thousands in equity. Or maybe you just got into your first purchase but feel financially stuck or overwhelmed now that you're actually making those mortgage payments. If I just described you or someone that you know, this episode is for you. But before we move on, 95% of people watching our videos are not subscribed. If you're enjoying our content and getting value from the information that we're putting out, there's no need to pay us. All that we ask is that you subscribe to the channel, give us a thumbs up, maybe even drop a comment. All of these actions literally cost you nothing, and they help get this information out to people who could really use it. Welcome to the channel. We're the Clear Close, the mortgage experts that get you clear to close on your next mortgage. I'm Peter, and this is Jason, and joining us today is a third part of our trio, Nikki Yoon. Welcome, Nikki.
Hi, everybody.
A quick intro for Nikki for those of you guys who are recently joining us. Nikki's been with us since the beginning, and she's been off camera for a while because of other projects that have been consuming a lot of her time. But we're super excited to have her back on the show. She's a veteran of the industry, over 20 years, and she has a lot of insights and a lot of experience to share with us. So today we are talking about being house poor or being house rich. I'm sure you guys have friends, have coworkers even. I definitely do, who have expressed the sentiment of being house poor or house rich. Nikki, what does being house rich mean?
So, house rich means that, it's kind of like more so our parents, right? They bought their house back in, the 80s, the 70s, right? Now they hold a lot of equity in the property. And also, one of the factors of house rich is that even though they have the equity in the property, but they're still strapped for cash.
Mm-hmm. Exactly. Because I mean, if you have a very valuable home, that's going to be a lot of net wealth, right? Or net worth. But you might struggle with cash flow, and that's why you're coined house rich, because you might have a fully paid off home worth $1 million, but cash flow wise, it's like, do you have $1 million in the bank? It's very different.
Yeah, you don't feel rich, but on paper you are rich because of the net
On
worth
paper,
aspect
you're
of it.
wealthy, because if you own a free and
Yeah,
clear
yeah.
home for $1 million, you made it.
Yeah. Okay, the other one is being house poor. Jason, what do you hear from other people when they say, "Jason, I'm house poor"? What does that even mean?
So, like, when I hear people say I'm house poor, it's like a large portion of your income, right, is going towards housing expenses. So you don't have much income left, like disposable income. So it's like you can't really save, you can't really go on vacation as much, because everything you're earning is going towards paying your mortgage or insurance, maintenance, like just whatever it takes to keep that roof over your head, right? So you're going to end up feeling house poor.
Yeah. So it sounds to me that basically both of these people, whether you're house rich or house poor, you're experiencing problems with cash flow, with disposable income. But the difference is if you're house rich, on paper you have a lot of equity, whereas if you're house poor, on paper you don't have much equity. Maybe you just started your journey into home ownership, right?
With house rich too, there's examples like people who inherit houses from their parents, right? That's also a point of house rich. I had a customer that literally he inherited a house, and he's like the adopted son of the person, you know? So right off the bat, he has a house that has 50% equity just built in just because of that. But here's the thing, like, even though he's 50% with equity, he was still suffering from paying that payment. So actually he has the house where he's house rich, but he's still strapped for cash.
Yeah, very interesting because it's not like he chose that house. It was gifted to him,
Given to him.
right?
Yeah.
Right. He had no choice in the matter. That's very interesting.
That's a really rare situation, right? So it's
Yes.
how did he feel then? Like, what were you talking to him about? Because like,
Well, they're
what would
selling the house right now.
oh, they're in
So
the process of
Oh.
selling the house.
yes.
Wow.
Yes.
Oh.
So they're just
Okay.
gonna go
Well, now
and
he's gonna be cash rich.
yes, now he's cash rich. So I told him, like, really, you are blessed, because a lot of people have to gain so many years to actually gain up enough money to put down on a down payment, and then once they gain to a certain amount, the value goes up, and then they're still chasing that down payment to be able to get into a loan that actually makes sense for them. And us in California, it just that spread is just becoming wider and wider. So
Mhm.
it's still a lucky thing that he has, I would say.
That's very interesting. I had a friend, their parents were very generous. I think the husband's parents were very generous and gifted them a house in Southern California. So it was like a nicer house in a nicer neighborhood, but their income wasn't it didn't match the home, you know what I'm saying? So they felt very house poor. They just started the journey. The parents put a down payment on a nice home, but they felt so burdened.
Yeah.
And it was very awkward. They're also Asian, so to like complain to their parents about this amazing gift of like a large down payment, they couldn't complain to the parents or just say like, "Oh, let's do something else." So, um, they ended up staying in the house, but they earned their way through it. So you know, they saved, they pinched pennies, and then eventually, I think the guy started a business, and now they're making enough to be comfortable. But man, it was for many years they struggled.
Yeah, you're right. I mean, sometimes the house that's like sometimes you look at things as is it a positive or a negative? Basically, like they still have to make that payment every day. I would say this. Um, Sometimes you have to stretch your finances in life, right? But you're stretching for the right reason. You're basically like you're not stretching to because I bought too many nice purses or that, I went on too many lavish vacations. You're stretching because you're actually now building wealth. You're building like real estate wealth and keeping that house over time. We know that the value is going to go up. So definitely like for your friend, him actually keeping the house for the first few years, his life actually then start to get used to it, right? He kind of start to get used to the fact that, okay, I'm not going to go out to eat every day or every other day. Like you start to get used to it.
So you're advocating it's okay to be house poor if you're early on in your home buying journey. Like it's natural to feel, in my opinion, it's natural to feel house poor
Yes.
because there's no way in heck you're going to have 80% down, 50% down. Like even 50% down in California makes me feel house poor because the
Yeah.
payment on like a 800 like $800,000 loan at like 5%. Dream scenario in the last 3 years is 5%, right? Like that payment makes my stomach hurt, you know? It's like a $10,000
Yes.
payment with everything, taxes and insurance. So it's like you have to if you're making 250,000 a year combined household after taxes, W2, I feel like that's more than half your actual net income going to
Yeah, that's house poor.
that's very house poor in California. And that's like how is that a problem, right? It's insane.
And seriously now, I have so many instances when people buy houses, like we're stretching it down to like the dollar on 50% debt to income ratio. It's not like, oh yeah, just using the salary income, everything is good. Literally stretching down to like, we need to use the overtime, we need to use all of this. It's not like before. The debt to income ratio, like how much debt compared to income. And these are like most of the people that are buying a house are at their best for their credit, right? This is at their
Hmm.
best credit, at the lowest, no credit cards at all, maybe a car loan or one or two, right? That's it. And literally everybody is still at, max that 50% debt to income ratio, and it's just crazy.
Yeah. I mean, if you put it that way, it's also scary too, because if you're in the healthiest position credit wise in your career to have the best credit score, have the down payment, have the income with no debts other than a new mortgage and an auto loan, what if life happens? What if repairs pop up, right? Do they have the
Yeah.
savings for it? That's like it's definitely a scary thing to be house poor. Hopefully we're not discouraging people, but like it's I think it's okay to feel the house poor because I think it's a normal process.
Yeah, I think that's everyone's like that's the calculation everyone has to make on a daily basis before they enter into the home and even after they enter into a mortgage is what's the long-term view of this? What is the purpose of why we entered into this loan? Are we just in it for the roof over our head, or is it something that we know will, sustain value, or if not bring value. Like we're very blessed to be in Southern California, where house prices will more often than not increase in value over time. But like we're experiencing right now, really weird situation in Florida and Texas and in the like the Bible Belt states. Some not all of them, but some of them, house prices have been declining very rapidly,
Yeah.
and it's not really all their fault. Like investors are pulling out of those areas, driving the prices of everyone else down, and
It's a huge drag. It's not even a
yeah,
decline. It's like, to me, it's like an annihilation because I see houses that were like from listed last year that are still for sale this year, and they're like 40%, 30% reduction in price. It's like hundreds of thousands of dollars. So
I have a
it's
yeah.
customer
tough.
that bought a house in 2023 in Florida, and right now it's worth almost the same. So,
Hmm.
So they did
it's
okay
gone
then. They
up and
bought
then
it at a
came
good
back
deal.
down.
Mhm.
So, and she
They're
was a
lucky.
investor too.
Yeah, that sounds like a very
Yeah.
lucky person to me because if they bought it 2023 and it's down to that same it stayed at the same price, they did a really good job buying it at a good like a great purchase price at that time for the market
But
Or a
she
because
good
did put
area.
in a lot of money into renovation. So that's the part that, like, when we first started talking, she thought it was maybe about 80,000 more than what it's really worth, because she was
mhm,
adding in the renovation cost to it. But it actually, like, it didn't, it's what other people are buying the house for, right? Not what
Right.
you put in. So
Yeah.
exactly.
So
What's
she
it
she
comping
lost
for?
money on the renovation.
yeah,
No,
She feel like she lost it.
she
Yeah.
made her money or she got her money back because if she didn't renovate the property, she'd be negative. She'd be down under even more because
that's
that home
Yeah.
wouldn't
true.
be where
True.
it's at.
True.
But it's like a timing thing. She's not looking to sell the house, right?
I think that's a really important point. The timing. So if you get caught when you're trying to sell your house and the market turns on you, that's really unfortunate. But if you don't ever plan on selling your house for the life of the loan for like 30 years, then who cares, right?
Yeah,
Like the market goes up and down, up and down, up and down, but you're just in your house for 30 years until you're done with that. And then you move it on to your kids, and then they get to live in it, or they get to sell it off, whatever. But
that's
over
why it's
30
so
years,
true.
history has shown that it's going to go up.
Exactly. I think that's the whole idea there.
I think that's a great place to transition into the next segment of what we're of this video is, what can people do um, in reaction to the feelings that they have of being either house poor or house rich. So again, house poor is, we're going to define it for the purposes of this video as, if you are in a mortgage or you're in a home, you don't have a lot of equity built up yet. Maybe it's FHA, maybe you just started your first or second year, and you feel cash poor, like your cash flow is not that great. Um, we're gonna also define house rich as someone who has a lot of equity, but still experiences cash flow problems. You know, they wish they could have more disposable income. So yeah, what can people do in the specific in those situations? So let's go number one with being house rich. You have equity, but you feel like you could use more cash, right? What can people do? What are their options?
I feel that if your house rich, I mean, absolutely utilize your equity for your life right now. I mean, like, a lot of times I always tell people, you know, when would you ever see your equity? When you sell it? When would that be, right? If this is your primary residence, if you sell it, you're still going to have to buy another primary residence. And now you're just paying for the equity that someone else, already gained. So you're kind of, I would say, if you have the equity in your property, absolutely, like, take some out to enjoy instead of like struggling through life. Because if a lot of times, like, people at that position, they already rack up some credit cards. I mean, like, right now we are at like the highest consumer debt ever, and that's why a lot of people are doing HELOCs, reverse for the elderly. I always tell people, just take out the cash so that you are not struggling through life right now. Because if you have raised your kids right, they are not there trying to, like, wait for you to pass away so that they can get your house. Really, like, why are you struggling every single month to make a payment? And then now the house needs painting, the house needs roof. And for you to add even, let's say, $200 more per month on expenses, that might even tip you over. If your house rich, utilize the equity that you have to serve the purpose right now.
You have to think of long term for yourself too. Like if it was my mom that I'm thinking about, I don't want her to be struggling on a monthly basis with her bills or like thinking about what I can or can't eat or buy or do or vacation. Like she already sacrificed enough of her life, right? In the beginning, like raising us as a
Yeah.
family and all of that. So it's like, please just do what you need to do. Like be smart about it, Don't go into credit card debt. Don't rack up personal loans and do other stuff to make ends meet. Cause technically at the end of the day, you do $100,000 or something in credit card debt. That's way worse than a reverse mortgage. Cause it's a FHA loan in most cases, which is like FHA interest rates. It's cheap money compared to toxic credit card debt, right? That's 20% interest with excellent credit. And then you got personal loans that are in the teens with good credit, right? It's like if you don't have a retirement or if the retirement cash flow is not enough to keep everything in place comfortably, you have to prepare for it. Personally, I think I really like the reverse if you're smart about it. I really like the HELOC too, if you're smart about it, but you just got to plan for it. It's something to think about.
So now let's talk about house poor. I don't know what you guys are thinking about house poor situation, but for me, I would say this to my friends who are feeling house poor. But before that, if you're a realtor and you recently sold a house to a client and they're calling you at 2 a.m. complaining that you convinced them to buy a house and now they feel house poor, well, send them this video and tell them to stop calling you and start calling us. Because until they sell that house, there's nothing you can do for them. Send them the video and we can guide them through their options of what to do to feel if whether they feel house poor or house rich. All right. So back to the video. Like look at your house. It's a beautiful house. It services your needs. This is a choice that you made and you did the math before you got into it. Maybe you just don't need that handbag. Maybe you don't need that trip to Mexico or Hawaii for a few years. Maybe you could put in some overtime, maybe stop looking at Instagram every day, maybe that's why you're feeling house poor is because you're comparing yourself with people who are living lives that aren't aligned to your stage of life right now. What would you guys say?
Every dollar you make right now and spend actually can hurt you or help you exponentially, right? So I was giving an example yesterday to a different customer, and it was over like a $280,000 loan on their home, right? And this was at their current HELOC that they have, right? It was only like $500 a month difference in payment between a 30 and a 15 year. But when you look at it over the course of the life of both loans, it was a 30-year HELOC. But if they just paid that $500 more a month, it saved them 300 grand over the life of the loan between the 30 and the 15. So that's the difference of $500 payment today can make over the course of 15 years, 30 years, because that 300 grand is your money that you would not have wasted on interest. That's your retirement. That's your future equity for yourself. That's going to help you stop feeling cash poor or house poor later in life, right? If you had an extra 300 grand.
Are you saying that if someone feels house poor, what they can do to not feel house poor is to contribute more aggressively to paying down debt?
Exactly.
Yeah, so you
Like
can get out of feeling house poor faster.
correct, because you're going to end up feeling house rich sooner because in that case, you're shifting the power back to you. It just takes time. Like if you want instant gratification in that regard, or an instant financial reward, there's none. It takes time. It's real estate. Your money needs time to compound. You need to set your expectations to fit what your end goal is, right?
Let me ask you guys this last question. Do you think preserving ownership is more valuable than having more disposable income?
I absolutely say that having ownership, preserving ownership is more than disposable income. Sometimes you don't even know where you're spending your money, and at the end of the month, it's gone. And with disposable income, is how you look at it, right? You know, and if you put it into home ownership, at least you know exactly where your dollar's going. So I absolutely would say that, having the home ownership, it's more of a priority.
I think it's you have to think of it in decades, right? So home ownership is important long term. So for me, it's like, I agree. I'd rather own my home for the next 30 years rather than have cash flow personally for having disposable income. Because if my house is paid off in the next 15 years, then I have all the cash flow of not maintaining the house. That's my money back, right? So it's like the way I see it is the faster I get rid of all my debt, I'll have more disposable income. All my income is mine, minus what Uncle Sam takes. Oh, that's a tough one though. I like disposable income too. Can I have
I
both?
know.
Well,
Disposable
yeah,
income
no, I
and
think
ownership?
let's
Let me think.
qualify it. Let's qualify it because you
Okay.
need some disposable income for emergencies and for you got to live your life, right?
Mhm.
But I think the slight edge goes to preserving ownership if you are in a position of ownership.
I also look at it this way too. Like if you're not buying a house and you have more disposable income, you tend to go out more, you tend to spend more money, and your rent's not going cheaper. Rent is like going sky high as well. So, and rent doesn't gain back any money at all. So at least you know that if you're putting in the money into a home ownership, you're gonna get that back.
It's really like that's why it's so important to talk to us, in my opinion. And I'm not trying to like boast that we're the best, but your situation is unique to you and your current life goal. So it's like you have to talk to a mortgage advisor or broker that has experience, that owns homes, and knows how more not just how a product, not just have a product to sell, right? Because like I hope what you take away is you learn something new every time you come watch us, Nikki, Peter, and I, right? We want to understand your situation so that we can really give you the best advice long term. Because it's like a lot of the stuff I see out there, it could be a temporary fix. Like that's why you went to the credit cards. Like that's why I see customers that went to the credit cards or personal loans. And then now they're running to HELOC because they didn't know they could have got a HELOC or a reverse mortgage, right? Or a cash out refinance or downsize your home. Like you just need to talk to someone you trust so that we can literally figure out what's right for you. So I don't know. Leverage us. Our advice is free.
All right. So I think we can end it there today. We're not trying to give a one size fits all solution because that doesn't exist, especially when it comes to ownership of a home, when it comes to personal finances, and obviously we are not licensed financial advisor. We are mortgage originators and mortgage brokers. So when it comes to your finances, it's got to be your decision. It's got to be your call. But if you want help with information about products, about strategy, definitely there's a link in the description that you can click to schedule a one-on-one call with either Jason or Nikki, and they can help you navigate through these difficult conversations. All right. So Jason and Nikki, thank you guys so much for coming on again and sharing the stories. Thank you guys for watching all the way to the end and rocking with us. We hope that you guys got some value out of the video, and please share it with a friend who lives in a gigantic house and they always complain about being broke. Maybe they'll stop complaining after they watch this. All right. Okay. Thanks again, and we'll see you guys in the next one. Bye bye.